Some conflicting data on the demand side trends, but some clear data on the pricing trends. What is that data telling us? We're going to cover that and more in this week's report. As always, thanks for taking a few minutes to join us for our weekly look at real-time market insights into our local housing market. My name is Scott Parker. I'm the Vice President of Sales and Marketing here at John Green Realtor, and I'll be taking you through this week's findings. So let's jump in. New listings for the 4 counties we track, and you can see it was another week of steady new listing activity. So I don't think it's likely we're going to see inventory levels continue to rise and catch up with the levels of previous years. So what we are really watching closely for the next couple months is the demand side. And here's a look at contract activity. And you can see there was a fairly decent dip this past week. At first blush, maybe our first signal of demand softening a touch. But then here's showing activity, and it looked like we were seeing a trend of slowing buyer traffic, but then we had a little rebound this past week. So not quite definitive either way in terms of where demand is headed at this point. This graph depicts balance in the market. So this is under contract versus new listings. 60% is kind of normal balance. 100% is kind of way out of balance. This number fell a bit this week, and that's because we had steady week over week listing activity and then a bit of a tick down in the contract activity. And here we had an off-market activity, so you can see the total number of listings that were on the market relative to the total number that left the market, and same trend here. And so how is all of this impacting pricing decisions by sellers? We like looking at median list price because it's a real-time signal of seller and listing agents' feel of the market. So sellers have been bullish, obviously, as you can see there all spring, as you can see in the graph, but it does appear to be leveling out and maybe even starting a decline. So look back at the past few years and you see that is seasonally what happens as we go from spring to summer. But it is worth noting that the peak appears to have happened just a tad bit later in the spring this year than usual. So to recap, contract activity dipped, but showing activity increase. So the demand side data is a little bit at odds. These next few weeks are going to be very compelling to see how that plays out. And it appears that at least from a median list price standpoint, prices have peaked for 2023 and will now start to level and or dip for the rest of the year. As always, thank you so much for taking a few minutes to join us, and we'll see you again here next week.